The opening price prediction once again is meat, slight beat actually. So what was predicted yesterday was that it'll open lower because the fear is greater. And then although it went back up, it was open slightly lower than the target, um, the prediction. And this is kind of the importance of the sentiment. So all the opening price prediction are hit or beat. Past couple days the sentiment was wrong. So for example, this day's sentiment prediction was flat, which this is flat, but slightly on the upside. So I thought it will be around here, past the pivot or around the pivot, but it went down and just hold that. And today was flat again, which it is flat, and slightly on the downside because of the fear element. But both days are opposite, and this is very important to note that this indicates there is a lot of fear, a lot of uncertainty, the trading lower, and this pop right here suggests being hungry for good news. So basically what happened here is, okay, let's track back to the day before. What happened was over here was the dollar sink. So it responded accordingly and then fell down. And over here is the real estate or the resale. Resale were higher, and the oil inventory were controlled as well. So oil price went up, but it responded too strongly, in my opinion. So that suggests to me that the institution, because this week aren't moving, that they really want to move, and that which leads back to tomorrow, the GDP. I think there will be a pop. So that's for the sentiment, but it's still trading flat until Friday, in my opinion. But it'll have a huge pop tomorrow after preliminary GDP report. But that is if it beats. If we are growing, we're controlling the inflation. It shows the signs that we're controlling the inflation, that it'll pop just as the previous CPI or the advanced GDP was showing. So that comes to the closing price. Was the estimate was made around, I think here. I was suspecting that it'll show the anticipation to the GDP at the end, which and while trading very flat, so it would buy in at the end. And this also suggests to me that it didn't trade below, was that they sold too much yesterday, so they don't have inventory, so they need to buy it, so which I think will happen tomorrow as well. So this closing price was made with this Fibonacci 50 is the retract point. So if it stays above 50, like this low and this high, it stays above 50, that still has upside strength. And I actually had it here. So like this and 50 here. So between these 2 points were the closing estimates, and it hits because of the sentiment. That's why having a sentiment is very important for exit and predictions. And talking about predictions, it's days like this on a low volume trading day, because nobody wants to get in. It's actually pretty predictable if we understand the day trader's mechanism. And I'll just spend a brief time here. So what happens is usually on a low volume day like this, day traders trade in range between the moving averages. So if you could just see here, they are always bouncing off of the moving average, especially this, the blue one is 200. So after it bounces and gets rejected by this is 9, gets rejected 9, which is very weak. It's not a there's no strength. So I fell back down again, and it's just hovering around between this 200 and this yellow line, which is 60 EMA. So even if this one over here, especially this is a Fibonacci 50, so it doesn't really, it has a very, how do I say it? This is a turning point. If it goes past 50, that means it's reversing. It's likely to reverse, but if it's not, so if I was trading normally, I would exit here because it's between these also. So this is exactly what happened here. It sank down to 200, and then this is something that you have to try yourself and understand the nuance of like this little candle strength, and you'll just see it after many times. This is not something it's easy to grasp just with words and examples. But anyway, so speaking of the not getting out here, if I was trading regularly, I would probably exit it here after entering around there. So this is an example for, I just want to elaborate how these type of trade works, catching the MACD below and then exiting, or how the sentiment trading with anticipating the day after, or basically swing trade, I guess. So I entered here, which is around 10, which is around here, because at that time, this is now not hitting the bottom, but at that time this hit the bottom because it ran up. That's why the range changed a little bit, but it hit the bottom, and then there was a confirmation on the second one, which is around here. So I took the trade there, and I would have probably left here if I didn't have the sentiment, which is top here. And also this is yesterday's close, yesterday's high rather, yesterday's high. So that is the point where everybody already put the orders in, which is around here. So I would have probably exited here if I was trading regularly, but I have a sentiment, and this is just one contract, but I have a sentiment going up leading to tomorrow, which I'm gonna get to now, is the price range I would have. And also, again, because this is a market that overreacts to a good news, so I'm gonna go a little wild here, and the price range would be from this pivot, the R2 to the R3, which is 1775 and 420 to 36. That's the opening and trading range, I believe. Because after overreaction, there is a very big possibility that it'll just sink back and then catch up later or something. And lastly, the sentiment is tomorrow sentiment I have is on the flat side, but it'll overreact to the bull side, and then afterwards it'll be it could just retract back what it gained, but generally flat, and then on Friday I think it'll sink. And then on the Fed FOMC prediction, I think they'll speed up the hike, and it could be 100 points or even higher than 100 points, because it seems like economy can handle it. Economy is robust, and job wages, the wages are going higher, and job unemployment claim is also getting higher. So that's also what we'll see tomorrow, the unemployment claims. I think it'll be lower actually. So it'll be better is what I meant. Unemployment rate will be better, and the GDP rate will be better as well. So I think the market will overreact to it. And even the recession issue, there was a lot of opinions, and I was one of the people who thought in May that they'll pivot during September, because if they start tapering in June, it'll take effect in July, and then it'll show on the reports in August and September. So I thought it'll start to reverse starting in September, and when they see that, they will pivot. They meaning the Fed rate hike speed will pivot. But now it seems like it can be actually the opposite, because if they're so concerned about the inflation because of the housing market also, um, that they want to lower the inflation rate as fast as possible, and economy being strong is actually a catalyst for it to speed up the rate hike, because economy can handle it. It's not gonna crash is what I mean. So I do think in September FOMC, but we could talk about that when that comes. But the point is that this Friday, Jay Powell might hint at that